Hello everyone, welcome back to our Accounting 210. In this video, we continue with chapter 3. So last time we started talking about the journal entry, and today we try to finish it, right? We are working on learning objective 6, prepare journal entry. So now let's get started. Okay, so last time we talked about the first 3 transactions, right? So let's have a quick review. We said when you purchase raw material, basically you debit your raw material, you credit account payable because we haven't paid yet. And then when you use direct material, you use direct material to do what? To work on that job, right? You use direct material to work on that job. So you can trace how much you used for that specific job. So for that job, you used 72,000 of direct material. So we should increase work in process and decrease our direct material. The third transaction is for indirect material, like all the glue, like all the lubricant. You cannot trace it easily, so it goes to manufacturing overhead because you don't know, hey, out of this 4,000, right? So this is the company. The company totally used $4,000. Let's just make up the totally used $4,000 on glue. How can you tell me, hey, out of 4,000, how much goes to this specific job? You cannot trace it, right? So you really don't know how much it really goes to that specific job. So we cannot put in work in process. What can we do is we first put in manufacturing overhead, kind of that swimming pool. We put in that pool first, and later when we allocate it, we cannot trace it, so we have to allocate. We allocate. Finally, we found out, hey, we allocate 500. I make up a number, right? We allocate 500 to that specific job. Then we can increase work in process. Okay. I hope you understand the logic. It's really important. It's really important. For indirect material, indirect labor, and then other manufacturing overhead. It goes to manufacturing overhead when it happens, and when you allocate it to that specific job, it goes to work in process. Okay, next one, use of direct labor. Assume you incurred 20,000 of direct labor on job. You will make the wage payment later, so you are not going to pay now. So this is direct labor. What did we say? Direct labor goes to work in process directly, right? Similarly with our direct material. So direct material, direct labor, it goes to the work in process directly. Okay, so if you say direct labor, it goes to work in process directly. So we have 20,000, and then you will make a payment later. So we have work in process. You can put direct labor. No, you don't need to. I didn't put in direct material. I'm going to put it later. So we have wage payable, right? We have wage payable. 20,000. We have wage payable 20,000. So I put this. I put whatever first. Also here, working process. I want to put direct material. I put direct material here just to make sure it's direct material. This is direct labor 20,000, and then work wage payable is 20,000. Okay, next one. Use of what? Use of indirect labor. What did we say? For indirect labor, what should we do? Can we know, hey, out of all this indirect labor, how much goes to that specific job? We cannot trace it. So what should we do? The way we do it, we first put to the manufacturing overhead, and then when we allocate it, it goes to work in process. So it's very similar with the indirect material. It's very similar with the indirect material. So let's look at this one. Assume you incurred 3,000 of indirect labor. The company will make the payment later. So you have indirect labor. You have indirect labor on jobs, okay? On jobs. So you don't know on that specific job. So our cost object is one specific job. We are thinking about one specific job. If you go to your textbook, it said you are working on one specific job. So you have, I don't know which one, but you are working on a specific job. Now it's on job. So totally you spend $3,000 on jobs. You don't know how much goes to that specific job. So we have to first put in we first have to put in manufacturing overhead. When we allocate it, it goes to work in process, okay? So we first put in manufacturing overhead, 3,000, and then we have this wage payable. We have this wage payable. We have this wage payable, $3,000. We have this wage payable, $3,000. Some example of indirect labor, like the superior, like the cleaning stuff, security. So those are not directly assembling the worker, assembling our jobs. So those are indirect labor. When you have indirect labor, indirect material, you always first goes to manufacturing overhead, and then put in and then when you allocate it, you get the portion, right? Get the portion out from manufacturing overhead pool and then allocate it to that specific job. Okay, I don't want to read this, but get the general idea, because we cannot trace that to one specific job. We cannot put in working process directly. We cannot put this 3,000 to individual job, right? We cannot put that individual job. So we have to put this manufacturing overhead, and then when we allocate it, so when it happens, so when it incurs, it goes to manufacturing overhead. And then when we allocate it, it goes to our work in process. Okay, when we allocate it, it goes to that work in process for indirect labor, for indirect material, and then for other manufacturing overhead. Okay. So now let's look at the next transaction, incurring other manufacturing overhead costs. So we are looking at other manufacturing overhead costs. What does this include? They have plant utility, they have depreciation expense, they have the insurance, they have this tax, right? So how do we take care of this manufacturing overhead cost? Do we know out of this 3,000 utility, out of this 4,000 depreciation, out of this 1,000 insurance, out of this 2,000 property tax, how much really goes to that specific job? We do not know, because we cannot trace this indirect cost. So you cannot tell me, hey, out of this depreciation 4,000, 500 goes to that specific job. You cannot tell me now. So what should we do? The way we do it is similarly with the indirect labor, indirect material. We first to put to our manufacturing overhead pool, and then when we allocate it, when we got general idea, hey, how much really should go to that specific job, then we can allocate a portion to our work in process. So what should journal entry we put? Remember, for all these other manufacturing overhead costs, we put to our manufacturing overhead account. It's like a temporary swimming pool. It just holds all of these amounts. And when we allocate it, we can get a portion of the water from this pool and then put it in our specific job, right? So we have this manufacturing overhead. And then what it includes? It includes utility, it includes utility expense. It includes utility expense, how much? 3,000, and then it includes depreciation expense. I just put depreciation expense 4,000. It also includes insurance expense. Insurance expense 1,000. And then it also has our tax expense. It has our tax expense 2,000. But do we make a payment for all of this now? We don't make a payment, so we don't credit the cash because we don't make payment. We will make payment later. So we have all this payable. So we have our utility payable. We have our utility payable. Utility payable, how much? 3,000. And the next one is the one I want to point out. For depreciation, you debit depreciation expense, what you should credit. Tell me, there is nothing called depreciation payable, what we should do. It's called accumulated depreciation. Do you still remember that one? Accumulated depreciation is a contra account of asset. Accumulated depreciation. I'm not putting the full word here. Look at your textbook, you can find the proper name. Accumulated depreciation 4,000. So this is very important, right? So make sure you don't put depreciation expense. No, you don't put depreciation payable here. We don't have something called depreciation payable. We have accumulated depreciation. And then we have the insurance payable. We have the insurance payable 1,000. And then we have our tax payable, another 1,000. Okay, sorry, I just put it tax payable 1,000. So that is our journal 2,000. That is our journal entry. All of this indirect manufacturing overhead should be accumulated to manufacturing overhead first until they are allocated. So we go to manufacturing overhead first until they are allocated to specific job and then become work in process. So when you allocate to that specific job, it goes to work in process. It goes to work in process. Okay, now next one, that's what we are trying to take care, right? So we have this allocating manufacturing overhead to job. So this is the main thing for this video. I stop after this transaction. I'll stop after this transaction. And then we have when you do the sales, and then when you do other expense, when you do your income statement. So we will talk about those things in the next video. Assume the job, right? We said for this specific job, you used 1,000 direct labor hours. You used 1,000 direct labor hours. The predetermined manufacturing overhead is $16 per direct labor hour. Where did you learn this? We have learned this in learning objective 3. How do we get the predetermined labor? How do we get the predetermined manufacturing overhead rate? Okay, now how do we allocate? We said you get this predetermined rate and you use your actual cost driver, you will get your allocation. So for 1 hour, we have to allocate $16 to manufacturing overhead. Totally, it used 1,000 direct labor hour. You first tell me what's the dollar amount. It has to be $16,000, right? We have to allocate $16,000 to that specific job, to job 604 as manufacturing overhead. We have to allocate 16,000. So what should we do? We said when you allocate, now you can know, oh, for this job, job 604, the manufacturing overhead is 16,000. So now you know this is related with that specific job. And then because we know this goes to that specific job, 604, we should debit work in process. We debit work in process, 16,000. And then where did we get this work in process? Remember, we had the swimming pool of the manufacturing overhead, right? Now we get the water from that swimming pool. We decrease our manufacturing overhead 16,000 and put it to work in process. To work in process, I can just put a kind of detail. This is manufacturing overhead. Okay, so we increase our work in process 16,000. We get this 16,000 from the temporary pool of manufacturing overhead account. So we have to decrease this manufacturing overhead 16,000. This is a very, very, very important, very, very important. I think you very likely will have a journal entry like this. So when we allocate it, we have to increase our working process, and then we decrease our actual manufacturing overhead because this is a temporary account. It just holds the money there for you to allocate. When you allocate it, you will get water from this pool, so this pool will be decreased. Okay, they said we allocate manufacturing overhead cost by crediting it because this is just a swimming pool. When you increase, when you incur, when it happens, you put water there, but when you allocate, you get the water out, right? So sorry, I just drew a bad picture here. This is your manufacturing overhead pool. This is your manufacturing overhead pool. When it happens, you put the water there. So this is when it happens, incurs, right? So this is, I just put the proper word. It's called, this is incurs. You put the water there when it incurs. It increases by debit. But now, when you allocate, you get the water out. When you allocate, you get the water out by crediting. This is just a temporary pool. Okay, I stop here. Next time we talk about almost done. We complete this job and then we sell it. We do journal entry for the, and then we also kind of prepare our income statement. I stop here so you will not be too tired. I see you next time. Let me know if you have any question. We are almost done. I promise you, we are almost done. Thank you. See you next time.